Welcome to Bears in Exile. Today is October 28th, and it is the weekend market overview. Looking at the Dow, SPX, VIX, TNA, UUP, FXE, GLD, and SLV. Okay, well, after Thursday's magnificent run, we did end up with a little no nothing candle today, and it doesn't really meet the requirements for having a complete decent candle above the 200-day moving average. So it will be interesting to see what Monday brings, and part of me thinks that this whole run is going to be an October thing, but obviously we won't know until November gets here. But nonetheless, that is in my brain that it could be just a month thing. As we can see on the indicators, downtick on the CCI, uptick on the stochastics and the 14-day RSI moving average. I'll retouch that in a second. Downtick on the RSI, uptick on the histogram and the MACD. I really like this confluence we're having with the 14-day RSI moving average and the stochastics. This is very good, and just watching and waiting for the hook. It will be coming at some point, and yeah, certainly it could get stuck up here for a while. It could get stuck up here for a week, and allow the markets to continue their move. But what else do we have to work with? Well, we've passed the price consensus levels from a couple months ago, so that's definitely in the bulls' favor. Gives them some sort of a ceiling, or a floor, I should say, to possibly launch from, giving it some support. However, we also have the price consensus levels from 2 months ago, right above where we are now, and whether or not that's going to stop it remains to be seen. Certainly, this is all euro-driven, and we'll see more of that here in a moment when we look at the UUP and FXE. But certainly, I really like the positioning of the 14-day RSI moving average and the stochastics. Fantastic. We said a few videos ago we wanted to have everything matching up in all time periods for a move down, and let's do a quick check on that. Certainly on the 180, CCI is very high, stochastics very high, 14-day RSI moving average very high, RSI high, MACD high, slight tick down on the histogram. This looks very good. 60-minute time frame. CCI could get a little bit higher. 14-day RSI moving average, perfect. Great position. Slow stochastic, good position. Fast stochastic needs to reset. Up higher. RSI very high. Histogram sloping down. MACD a good ways up there. So I would say the 60-minute also looks good. 30-minute CCI high. 14-day RSI moving average high, already sloping down. Stochastics not in a great position, but they move quickly. It's just a 30-minute. Downtick on the RSI, slight uptick on the histogram, and MACD pointing down. So a few things here that may even go down and then go back up for it to properly, completely reset. But still, not bad at all. And 15-minute is just too darn fast to really, it can go a complete rotation in a single day or more. So I won't even really look at that. But so, confluence, it's coming. SPX ended with not even really much of a real body whatsoever, and but it did close above the 200-day moving average. Very nice. Short-term moving average is pointing up. We have a little bit of excessive separation, but nothing, major. So tiny bit of wobble, but also nothing major. secondaries, essentially the same as the Dow, so no need to rehash that. And we need a good, healthy, strong green bar above the 200-day moving average to give us indication that it's going to stay up there. The VIX. Ooh, we have a bearish engulfing. We have the short-term moving averages pointing down. We have the bullish bar gone. Yeah, CCI very low, ticking up. Stochastics very low, pointing down. 14-day RSI moving average very low, pointing down. Slight uptick on the RSI, down tick on the histogram, down tick on the MACD. And we've been saying for a couple of videos that we want the proper setup on the Dow and the SPX, which we appear to be getting. And when they begin their move down, we want the 200-day moving average on the VIX to have held. And we don't have much room at all. So it definitely is in danger. And we have this bearish engulfing. And so it is not looking good. But it isn't broken yet. So looking for that. And we shall see. TNA. Also no real body to speak of. Just a little doji hanging up there. But it has broken the bearish bar. We have even more short-term moving averages peeking through it. Yeah, CCI high ticking down. Stochastics getting pretty high, but still they could go up some more. 14-day RSI moving average not yet at overbought. Downtick on the RSI very high. Uptick on the histogram. Uptick on the MACD. And we are above, closed above this previous peak. This is bullish. It would be much nicer if the 14-day RSI was already an overbought, but you know, it'll get there. It'll get there. Now we were saying on the Dow and the SPX that the 14-day and the stochastics could get stuck in overbought. If that's the case, we had been saying that there's so much room on small caps TNA to for movement towards the 200-day moving average. It would be truly incredible if it could get all the way back up there and break it. It is way too early for that, but still, if it looks like we are going to be bullish for another week or 2 weeks or whatever it is, this might be a good play. Maybe. UUP. Ooh. Well. Oh, I didn't even bother to mention the Bollinger Band. I guess I should retouch that. But we had the side take getting back inside of the lower Bollinger Band. We were expecting that. Look at the short-term moving averages. We have obvious excessive separation and wobble. So there is something there. Doesn't mean it has to turn around on Monday. But nonetheless, it will probably only get worse before it gets better. So that's good. Uptick on the CCI, very low. Slight upticks on the stochastics. 14-day RSI moving average pointing down. Still very, very, very oversold. Uptick on the RSI, very oversold. Downtick on the MACD and the histogram. So while this certainly is still bearish because we have the short-term moving averages pointing down and we have no uptick to work with, there are problems, obviously. So at some point that will turn around, and we'll be watching for that. We can definitely thank the entire move of the market to this movement in the dollar. FXE got the side tick, getting us back inside the upper Bollinger Band. We have closed above the 200-day moving average. We need a decent candle of strength above the 200-day moving average. You can see that we have excessive separation in the short-term moving averages. Yes, it's still early, and it could get much more sloppy before it corrects itself. CCI very high, getting a down tick. 14-day RSI moving average massively high. Stochastic still very overbought. Um, Overbought in the RSI downtick, uptick on the histogram and the MACD. So we need to see if we get some sort of indication that it's going to hang around up here. Certainly we could get a few more days, a week, whatever, which would bring this who knows where, maybe even all the way up to the major price consensus level of the previous month. Entirely possible. But at some point, the short-term moving averages are going to get sloppy enough that we will get a downtick and at some point get a retest of the still bearish bar, but by that time maybe a flat line, maybe even a forming bullish bar. GLD, also no real body. We have a flatline long-term bar. We have separation, continuing separation in the short-term moving averages. Middle Bollinger Band below them, giving them strength to lift up. CCI very high, downtick. Stochastics very high. 14-day RSI moving average, lots of room to move in our second VIX. Downtick on the RSI, uptick on the histogram, uptick on the MACD. So, while it is appearing overbought in many ways, that 14-day RSI moving average should help cushion any kind of corrective move. So, this is good. Kind of surprising because back here we were expecting a move down in gold. It did move down and then decided to turn around, and now it's going up. So, good. I like the idea of gold going up. I certainly do. SLV, no real body. It's so close. I don't know whether or not to count that as separation, full separation or not going into the bar, because yeah, I can see all of the lines, but it certainly isn't pretty. So I could definitely see a retest of the 200-day moving average if this is the case and we have full separation prior to entering the bar. But yeah, it's really debatable. CCI very high, getting a slight downtick. Stochastics very high. 14-day RSI moving average on the move up. Plenty of room to move. RSI almost getting to overbought. Uptick on the histogram, uptick on the MACD. So, we said that it was the Bulls' game to lose, and if they were to fumble the ball, they have no one to blame but themselves. I believe that was in the daily running thread at the beginning of the day a few days ago, and certainly that is still the case. Bulls are definitely totally in control, and I am waiting for that NDE of France losing its AAA. I do believe that it's coming, and when it does, I think that the major indexes will be aligned for a perfect move down. It doesn't have to happen Monday, it doesn't have to happen Tuesday, it doesn't have to happen Wednesday, but it'll come as soon as all of the bears have covered and all of the bulls are all in, and then we'll see some pain. But till then, squeeze, squeeze, squeeze. Don't squeeze the Charmin, squeeze the bulls. I'm getting a little tongue-tied. It's late. So, anyways, as always, all investing decisions are your own. This chart and video are for entertainment, educational, and consumption of time purposes only. Thank you.